So we have to discuss SoFi stock and more specifically taking some profits or even taking all of our money off the table because we are up well over 100% in just the past 4 months. And that, my friends, is several years worth of gains in just 1 year. So it's prudent to take money off the table, right? Well, guys, let's discuss this topic in depth today, specifically about SoFi, right after you hit that like button if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. I'm sorry. Some of you guys are going to be happy. Some of you guys are going to love it. Some of you guys aren't. That's okay. That's exactly what we're here for. So I know a lot of you guys out there, thank you very much for being a part of this channel, but I know a lot of you guys out there are up massively on SoFi. If you ignored all the stupidity that kind of seems to follow this stock and the retail crowd out there, and instead you just simply took advantage of the opportunities to make 150% in just a few months here with SoFi. And obviously, if you've been in it since we have, you may be on a 3 or 4x at that particular stage with SoFi stock. I know for the better part of 3 years now, I have bought SoFi repeatedly on rinse and repeat. As a matter of fact, I have bought SoFi 28 times just this year, guys. And overall, I bought SoFi well over 100 different times. I might even be close to 200 buys in SoFi specifically, with the vast majority of those shares being kind of in that $4 to $7, $8, $9 range or so. And many of you guys out there have done the same exact thing with the stock, which if you want to see my buys in real time, like SoFi under $10 for years, Palantir under $10 for years, that all my group members got to witness in real time, and many more stocks, make sure you take advantage of the earnings flash sale that ends very soon as the earnings season winds down. We'll talk more about that at the end, but it is the pinned comment down there for those interested in locking in their spots before that sale ends. Now, I'm going to come at this from a long-term buy and hold investor's perspective. Guys, keep that in mind. Anytime on this channel, I am not talking about trading or hedging or any other garbage that's out there that Wall Street likes to do. Hey, I'm not saying it's right or wrong. It's just not the game that I play here on this channel. It's not how I invest. It's not how I made my money investing, more importantly. So I can't really speak to that like I can. So this is a long-term buy and hold investor's perspective. And there are 4 key points to this discussion itself in regards to selling SoFi. And I'll also give you the 2 scenarios where I would sell SoFi stock. Yeah, there are scenarios where it would happen, guys. It's rare, but I would do it. And then I'll give you an answer specifically on what I'm doing with SoFi. So key point number 1 is taking profits or trimming is a trader's move. When you hear about somebody taking profits or trimming a position, understand those are all hedge fund terms. That is what traders do. That is how they get paid their money. So that's the reason why whenever I hear somebody, hey, I should take some profits, maybe I should trimming, I'm kind of thinking, oh, okay, great, you're a trader. That's okay. Nothing wrong with that. But those are all trader moves. The reason why they do that, the reason why they trim, the reason why they take profits, they'll give you all these reasons on CNBC and everything else about, oh, I'm trying to protect against this and there's some downside risk here. Guys, they're fooling you with that talk. They are simply trying to increase their bonus, and they get paid based upon taking profits. That is where their bonus goes up. Remember, they're not investing their money, they're investing your money, other people's money. They don't get paid based upon growing your portfolio up 100%. That's not what they get paid for at the end of the year. They get paid when they take profits, and then they take a percentage of that. So it's not in their best interest to just simply hold and see what happens. It's in their best interest to trade so that way their bonus goes up. Every time, they make 20%, 30%, whatever their mark is, they're going to be trading out of that position so that way they can get their bonus. And remember, if they make a bad trade and they lose you money, they don't lose money off their bonus. So they get the best of both worlds. When they lose, well, nothing happens to them. And when they win, instead of having a long-term vision and trying to make you 100%, they're going to be trimming well ahead of time to pad their bonuses because they're taking money out of that trade that they then, profitable trade. Well, hey, they make 30%. You're not getting that 30%. They're taking a massive cut of that in order to pad their bonus. That is why they always want to trim or take profits or any of the other things that you hear that you feel like I should be doing that as a prudent investor. It makes sense. No, it doesn't make sense unless you're investing somebody else's money and your bonus is dependent upon that. Statistically, that has proven true over the long run. So next up, what was your plan? A lot of times when this question comes up, especially in my group members there where we really get deep on this sort of information and this sort of discussion, my usual question is, hey, what was your plan with the stock? All of a sudden, it was a long-term hold. Hey, I want to hold it for 5 years. I believe in Noto's vision. If I think it can be at X price in 5 years, we'll say $75 in 5 years. And therefore, that will allow me to then exit the stock and buy cash flowing real estate. Okay, great. So it was a long-term hold for you, but now you're wanting to trade. That doesn't make any sense at all. What was your plan with the stock, and now why are you deviating from that plan is the big question we have to answer. And usually it's just simply because somebody on YouTube said so, or you want to lock in your gains or protect your gains or whatever the case was. But now you're deviating from your plan in order to trade. Now, that's okay if it was a trade to begin with. Like, hey, I thought it was a swing trade. I believe this is a great swing trade candidate. Okay, that can make sense. But typically when I talk to folks, it was a long-term hold. They're in it for the long run. Then you get a kind of a big run out of nowhere, right? Always happens. Wall Street gets stupid to the upside and the downside. And so now you're looking to trade. When I look at scenarios like that, that is why retail routinely buys high and sells low, because they're letting emotions and other things dictate what they do instead of having a long-term plan and simply sticking to that plan to begin with. You made that plan without emotions. You made that plan without all the other noise and all the other garbage that goes on around that. But yet here we are, you get a nice run on the stock, and now you're wanting to deviate from what you planned to do originally. So make sure when this sort of stuff comes up that you are simply sticking to your plan. Now, maybe your plan was to get out of the trade at, when it gets to $22. Okay, that right there can make sense. You planned that out ahead of time, and then you executed on your plan because you were going to do something else with that money. That makes perfect sense to me. But 99% of the time, that is not why people want to get out of the stock. They're wanting to get out of the stock because they're having some sort of an emotion about something, or something's got them riled up over here, or something came up over here on social media, and now they're thinking about deviating from their plan. Or most likely, they didn't have a plan in the first place, which is why we talk about planning so much here. Goal setting and planning is the key to successful long-term investing. You cannot come into it and just expect I'm going to wing it on my plan. It doesn't work that way, guys. You will fail over the long run if that's it. So stick to your plan. Number 3, the right time to take profits usually means you left a fortune on the table. So because SoFi is just kind of at the beginning of a nice run here, and we'll see how far it goes, I'm not going to use it as an example, but I am going to use Palantir as an example to show you how the right time to take profits means you left a fortune on the table. And it's very easy, guys. The right time to take profits on Palantir, according to YouTube, according to Wall Street, according to everybody, was back when it got up over $15, $20 or so. People started getting out of the stock. And then when it ran up to $30, yeah, definitely a good time. Hey, maybe you held on to $40, $50. Those were all the right times to take profits. Absolutely the right time. But look at the end result if you took your profits or trim some of your position or whatever the case was. You left a fortune on the table, and all you had to do was hold the stock an additional, 6, 8 months or so. It's all that you had to do, but yet the right time to take profits in regards to when the proper time, when all the charts align and everything else lines up perfectly, you basically ended up leaving a fortune on the table. I learned this a long time ago with Apple. I left 7 figures on the table for a few $100s in profits. My percent gain was awesome. We'll talk about percentages here in just a second, but long-term cost me 7 figures in regards to money. So the right time to take profits usually means you're going to leave a fortune on the table long-term. That's why I don't do that. That is why it gets you in trouble so much as a long-term buy and hold investor. Now, again, you see exactly what Wall Street wants to do. They want to pump up their bonus. They have no desire to try to figure out what's going to 10x next or anything else of that nature. They're just simply looking to pump up their bonus this quarter because they want to get paid this quarter. But most of you guys out there are not in that situation. That's why you got to leave that mentality out, because you never know when your 10x stock is going to happen or your 100x stock or whatever we're all chasing out there. You'll never know when it's coming. You never know which company it's going to be. You don't know any of that sort of stuff. And when it happens, it won't feel like it's happening until it's actually done. So you're going to leave a fortune on the table if you start trying to take profits at the right time to take profits. And number 4, the percent you're up has nothing to do with valuation. A lot of folks will get in the mentality of, hey, it's on a 100% run, so it's got to be overvalued. Well, yes and no. That's actually not true at all, because sometimes you can be up 100% and still be undervalued. Look back at Meta whenever it fell all the way down to 80. When it ran up to 160, you're up 100%, right? Great run. Great run on that stock. That stock was still significantly undervalued. Vice versa, let's say SoFi doubles up from here, right? SoFi goes up over $40 per share. Well, guess what? You're significantly overvalued at that stage, and you may have pulled a few years forward in regards to the stock price for this particular stock, for SoFi. So your percent you're up has nothing to do with valuation. Get that out of your head. It does not even equate to me. I don't care what I'm up. I don't care whether I'm up 300%, 500%, 1,000%. It has nothing to do with valuation. You've got to learn how to do valuation so that way you understand where you're at. You might still be in undervalued territory, meaning taking profits, even though that's the right trading move, right? That's the perfect trading move. But if you're still undervalued, that tells me it's the right time to buy more shares, not go taking your profits or trading out of the stock or anything else like that, because you are still undervalued, meaning you should still be stacking those shares of the stock. So the percent you are up has nothing to do with valuation. Don't even let that enter into your equation. If you're like, oh gosh, I'm not real sure though, I'm up 200%, you're looking at it as a trader. You're not looking at it as a long-term buy and hold investor. The percent you are up has nothing to do with valuation, okay? All right, so let me be upfront right here with you guys. There are a couple of scenarios where I would consider selling a big gainer, a stock that had a big run. And hey, I need to get out of that particular stock because it's just time for me to exit the position itself. So let's talk about those two next. Number one, it was a low conviction play or the stock gets caught up in a hype run. All right, so let me kind of caveat that a little bit where I'm talking about a Wall Street bets type of run to where it just goes up to 1,000 PE or just, it's based purely on some ridiculousness that's out there. If that sort of thing happened with SoFi stock, I would absolutely be exiting that position. Basically, when I'm looking at it right now where it's at today, if all of a sudden it just, I don't know, whatever reason it catches momentum out there, all the algorithms pick it up, then obviously all the hedge funds start playing along too, right? And, SoFi goes up to, $50, $60, $80 or so. At that stage, I know I need to get out of that stock. Let's say that happens over the next couple of months, right? Just, I don't know, before next earnings call, that's what we get. We're coming into earnings at $80 per share. I am absolutely getting out of SoFi stock. Now, the other scenario where I would do that is if it's a low conviction play or a stock I was already looking to get out of anyways. Now, that's not SoFi. Let me be very, very clear. That is not SoFi for me. It's a high conviction play. So I wouldn't be getting out of SoFi just strictly because it had itself some sort of hype run of some sort. Like it's a kind of on right now, right? Like if SoFi got up to $30, $35 or so, I'm still probably not considering selling it because it's a high conviction play. But if it was a very low conviction play and I got this sort of run and the valuation got stretched like that, I would absolutely be exiting that position because, hey, it's a low conviction play anyways. I've made some very good money. I need to move my money to a higher conviction play to begin with. So that's exactly what I would do. Now I would plan it all out. I would have targets set ahead of time. I would have everything else happen. We had this happen actually end of last year with Lemonade, for example. Had a big hype run there at the end of the run that like everybody else got. For me, I didn't trust management. Management has not executed to my expectation over the next couple of years. They just have not done a good job overall. So whenever I got a really nice run in that stock, I decided to go ahead and exit that position and redirect that money to some of the stocks that were beaten down. So some of that money actually probably went to SoFi whenever it got beaten down just a couple of months later. And no, I haven't looked at that stock. I have no idea what happened with it. I don't care. Whenever I exit, I move on to something I feel long-term is going to suit me better, my portfolio better. And that right there would be SoFi. And obviously SoFi is not on a Wall Street bets type of run right now. Let me be very, very clear about that. So this doesn't apply to SoFi at all, but maybe the second one coming up here absolutely does. So number two is something fundamentally changed with the stock. So given that right there, has something fundamentally changed with SoFi? For me, the answer is a definitive no. It has not. There has not been some regulation that makes it harder for SoFi to do business in the future, right? That right there would be a fundamental change. Well, guess what? Actually, the regulation has actually gotten easier for SoFi to print more money in the future with, obviously all the different news with the crypto and some of the other bank regulations getting loosened here. It's absolutely going to benefit SoFi massively in the coming years. So for me, something has not fundamentally changed with SoFi, but you can have scenarios where it does, right? Like let's say the actual, regulation and everything else tightened a lot and hindered their performance. Let's say all of a sudden people don't want to use banking apps anymore, right? People want to go back to traditional branches. I don't think that will ever happen, but let's just say that did. That would be a fundamental change with the company, with the stock itself. Let's say Noto and a good chunk of the management team left to start another startup of some sort instead of staying with SoFi. That to me would be a fundamental change with the business where I would absolutely consider selling it, not because I don't love SoFi, but because I believe this is the right management team to execute on a high level to bring me in a lot of money on SoFi stock. And if they left, that's a fundamental change with the business for myself, in my opinion, of course. And it's something I absolutely would have to seriously consider getting out of the stock because something fundamentally changed with the business itself. Now, what am I doing with SoFi given this last run? Well, if it isn't obvious by now, guys, I'm going to strictly hold my shares, hope that we, basically get some sort of a freak out again, so that way I can pick up some more cheap shares and make an easy 100% again. Once again, rinse and repeat. This is kind of the stock to where I see a lot of folks posting, comments on YouTube and a lot of other places like that, where they're kind of saying, oh, this stock sucks, I can't make any money in it. Well, it's probably because you're chasing the hype and buying high, and then of course selling low and other things of that nature. This to me has been a stock that has been easy money for the past 3 years. Hey, just keep picking it up in the $4 and $5 range, right? Then it kind of picks up steam and it's kind of that $8-9 range. Hey, keep picking it up there. Every time it kind of dips down. All right, runs up to 15. Hey, back off for a little bit. It was getting way ahead of itself. And then of course it would come back down. You could pick up more shares again. It's been kind of an easy rinse and repeat process with SoFi. So for me, I have no reason to get out of the stock. I trust this management team's long-term vision. We all know, at least if you've been watching this channel for a while, it is absolutely not the right time to get out, because the big stuff is coming in 2026 and 2027, according to this management team, who, by the way, for almost 4 or 5 years now, has rinse and repeat, beat and raised on guidance, has hit every single target they put out there. So there's no reason not to trust this management team whenever they say, hey, we're doing well right now, but the really good years are coming in 2026 and 2027. Well, you know what? I want to be in this stock for those particular performance underneath of the business. Now, what Wall Street will do, who knows? For all I know, their EPS is going to skyrocket, revenue is going to skyrocket, and Wall Street's going to beat it down because Wall Street's just dumb. And if you don't think that's possible, it absolutely is possible that Wall Street gets dumb again. So for me, I'm excited for the stock. I'm excited for the journey. Absolutely, we get any weakness, guess what? I'm going to add more shares and continue to stack that, because we all know share count is what matters in the end. And if you want to learn exactly how to do a valuation, you want free courses, free coaching, you want to be a part of the best 6, 7, and 8-figure Discord out there, see all the buys in SoFi and every other stock that I'm buying, and a lot of our group members are buying as well, including our super investors. Guys, there is so much involved in the group. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.